Hi, welcome back to Triumph Tales. In this first series, we've been focusing on business, leadership, and technology for those large tech companies here in Asia Pacific, the small startup tech companies in this part of the world, but also those organizations that fund those startup companies. And today, I'm absolutely delighted to welcome in Paul Santos, the managing partner of Wavemaker Partners here in this part of the world. So, Paul, welcome to it, and thank you for coming in.
Oh, thanks for having me.
Perfect. Now, at the moment, here we are in the middle of 2024,
Yeah.
and a lot of the early stage companies are saying it's very tough to raise money at the moment. Why is that? And is it accurate or is it not accurate?
I guess it's accurate in some sense, right? If you kind of think of, I think it was Q2 2022 when interest rates rose, and so money was no longer free. I think that was kind of a line. Some people call it, funding winter. Happened after that. So imagine a time, I guess, before that where interest rates were so low, risk was on, so people just kept investing. And then all of a sudden, when interest rates go up, risk goes off, people become more selective about what they would fund. Um, I guess, pre-funding winter, there was a huge premium paid for growth, and sometimes it might be growth at all cost
Mm,
or at any cost, and that would result in negative unit economics. And people would continue funding it because it would grow, and there would be somebody coming next. So when interest rates rose, kind of money started to think twice
mm,
about funding these fast growth companies that kept burning
mm.
more and more. And so that's what's happening right now, that people are becoming a little more selective, I guess. And I guess it's good. It's a good thing. You kind of sober up.
Mm.
So if I guess if you're a startup that was doing it the old way, and I think there are fewer of those that are trying it right now, then it's really tough. And if you're a startup that actually can prove you can create value, uh, you should be able to get funding. It might be tougher. Valuations will probably be different
Mm.
from before, but I guess we'd like to believe that crisis leads to a flight to quality, is
Mm.
what I always try to
Mm.
say to our startups and encourage them. But it's also true, right? You need to up your game. And so if you're a startup that's doing something meaningful, that can actually scale, that has defensibility, that can deliver positive unit economics, um, you should be able to get funding.
So what type of startups do you and Wavemaker look for? What's your investment thesis?
Yeah,
What gets you excited? What gets you less so?
yeah. So a little bit about us. So we've been around 12 years. We're raising our fifth fund. We've invested in a couple of hundred startups in those 12 years. And we invest primarily in what we call early stage enterprise, deep tech, and sustainability. So early stage typically for us means a seed to pre-series A. Think of it like a $1 to $3 million
Right.
round. We'll typically lead and write half the round or more. When we say enterprise, we mean B2B. So it can be large enterprise, typically from Singapore to the rest of the world. It can be SME focused in one market or maybe multiple markets. It can be, software as a service from somewhere in Southeast Asia for the rest of the world, or B2B to C. So we do primarily that, as opposed to consumer,
Right.
which was by far the popular flavor in the region.
Yeah.
When we say deep tech, we simply mean that we take technology risk. Most of our friends in the region don't like to do that. So it's a range also, I guess, from fancy AI to hardware to biotech. And then sustainability for us means the UNDP Sustainable Development Goals. So the idea is we'd like to solve meaningful problems. And again, Because of our enterprise focus, it's mostly number 8 and number 9. So number 8 is decent work and economic growth, which is SME. And then number 9 is industry, innovation, and infrastructure, which is mostly large enterprise and deep tech, but will intersect with a bunch of other stuff,
Mm.
right? Whether it's climate or financial inclusion or education, etc. But suffice it to say, we like to think that solving meaningful problems will allow you to create more value. There's stuff that we invest in that, if we'll just be honest, just get consumers to consume more. And
Mm.
so maybe
Mm.
those kinds of businesses, you can make money, but maybe less
Mm.
sustainable. So that's been our theme. It's been our theme, again, for 12 years. About 90% of the investments we've made so far are in that sweet spot. And again, in the region, you'd probably be hard pressed to find another shop that's been as bullish in the space, like
Yeah.
made 100 B2B investments, or we're 150. We're at about 170, 180 out of.
Wow. How on earth do you manage a portfolio that size?
Yeah,
I mean, just the ground you've got to cover, the time you've got to spend.
that's true.
How does that work?
It's a good question, right? So again, there's many ways we think about that. So the first way we think about it is we invest in entrepreneurs who we believe will succeed with or without us. Hopefully a little better with us, right? And as an entrepreneur myself, like I don't believe in the myth of the superhero VC,
Mm.
right? If you want an entrepreneurial team, or you believe an entrepreneurial team will be able to build a really big business,
Mm.
they have to be
Mm.
capable, right? And so while we might help, we don't really need to be doing their jobs for them.
Mm.
So that's kind of the starting point. And then, if you think about how we try to add value, we think about it in two ways. Of well, a two by two matrix, because everybody has to
We
have a
have to
two
have a
by.
2 by 2. Yes,
Yeah,
it's
yeah,
obligatory.
yeah. So the two by two matrix is, perspective and network, commercialization and scaling, right? So yeah, commercialization, because we do B2B. Think of it from marketing, business development, sales, are areas that our portfolio is keen on. And then the other one is scaling. And scaling for us is really around organization and culture, right? If you truly want to build something big, you cannot build it without the right organization culture. So those, let's call those the main topic areas.
Mm.
And then perspective and network are the ways we do it. So perspective is kind of from us. So I've been an entrepreneur. I've built and sold a business with 20 employees. I've built and sold a business with 2,000 employees. I have my own battle scars that I'm happy to share, um, because we've invested in a couple of hundred companies. Um, we've seen a couple of hundred movies, and
Yeah, yeah.
have experiences that we can share from there. Um, Over time, we don't have all the answers, but maybe we've accumulated a bunch of really good questions to ask. And I guess finally, we understand, especially coming in at the early stage, that the entrepreneurial journey is a human endeavor,
Mm.
right? Like it's a very personal experience. You can't always separate business from the personal stuff, and sometimes that gets in the way. And so we're also happy to have a discussion around that. So that's broadly perspective, and then network is simply that because we've been doing this a while, we have 200 startups, founders that we can introduce to each other. We've co-invested with practically everyone. We have a strong LP base, and of course, a strong advisor network, of which
Mm.
you and Salamander
Mm.
are part of, and we're grateful for. And so, how do we manage? Final question is final answer is really around our team and our ecosystem, right? So, within our team, we have an investment team. We have members in Singapore, Indonesia, Vietnam, and the Philippines. And so that team is more active management and sourcing of deals. We have a portfolio management team where sometimes some of these companies really need less of our help, and so they will be a little more passive,
Mm.
but they stay on top of things. And then, they're complemented by, again, our network of advisors, venture
Mm.
partners. So we're not precious about board seats. What I mean is sometimes it's one of the partners or one of our principals, but it's also sometimes one of our advisors, right? Sometimes they'll sit on boards on our behalf. So when I say we're not precious, we recognize that the board seat is really there to take care of the company and all shareholders.
Right.
And when we have the chance to assign one, we try to find the best person for the job.
Mm.
And so I know that's a long answer to a question, but it's really not a simple one. We do a variety of things to try to help our founders succeed.
So for some of the people that's listening that may be in university or just having left university that's interested in setting up their own business, what's the approach to a VC fund? How do they find you? How do they talk to you? What do you expect them to say when they do meet you?
Yeah. So again, I'll answer that a little differently. If you look at our portfolio, 90% of our founders are teams, founding teams of founders were 30 and above.
Mm.
More than a third are actually 40 and above.
Interesting.
And because we do the enterprise and deep tech stuff, they typically have industry or technology
Experience
experience
already.
or
Yeah.
insight that not too many people will have.
Mm.
I know you ask me what attracts us. That attracts us, right?
Okay.
Like, how do you see the world differently?
Yeah.
Right? Like I think Peter Thiel likes to say, what important truth do you believe that few people agree with you on? So that's kind of attractive for us. That's our way. So if you're a fresh grad, etc., or just any entrepreneur who wants to contact us, there's just many ways. So you can look at our portfolio of entrepreneurs. There's probably someone you will know there or you'll meet there. You look at our LPs, our co-investors. Somebody can introduce you.
Mm.
You can look at our team. Again, we have people on the ground across these markets.
Mm.
They should be approachable, and you tell me if they're not.
Mm.
Um, and sometimes people will just hit us on LinkedIn, just hit us cold. And yes, we funded a couple of folks that have come along through that
So the
channel.
legend is real. Yeah.
Yeah. I mean, after they reach out, we find that there are common connections typically, and we
Mm.
just ask. But we try to remain open.
Mm.
Um, so the team has grown, and they try to keep me away from from the startups. I kind of meet them a little later, so people can reach out to me, but ultimately, some member of the
It's the
team will
team.
probably meet them
Mm.
before I get the chance to meet them, just because there's already the existing portfolio, there's fundraising, there's all of the internal stuff that I personally need to
So
manage.
any of the legends true where people are drawing things on napkins in restaurants and you're putting checks across the table? I mean, is this legend or is this reality?
Well, again, it begins with, I guess, the credibility and trust that people will have in these relationships. There have been folks that we might have known for some time that it doesn't happen, in one sitting and we go, but we discuss opportunities, we discuss what they see, we brainstorm a bit, we leave them to it, they come back. That's probably more
Mm.
realistic. So we've funded some folks before they've launched the product. I mean, it happens once in a while. Valuation will be different, risk
Of
because
course.
the risk level
Higher.
is different.
Mm.
More often than not, we fund people with some product already, with some revenue traction already, and that will be a varying degree of seed
Mm.
to pre-A. But I guess even as a firm, while we have, let's say, our sweet spot or basic ways we try to operate, we always try to leave some openness in there to be surprised pleasantly.
Mm.
Sometimes it's not so pleasant, but
Well, yeah.
you have to leave yourself open for that. So we try not to have all of these hard and fast rules. It's really harder when it's already late.
Mm.
I guess for us, when something is already highly valued and it's already mature, we're probably not the right partners for those guys. But as you come in earlier, there's probably less of these.
How long is the journey when you invest in a target company? Um, Is it a 5 year journey, 7 year journey? Do you exit earlier,
Oh,
later? How
that's,
how
that's a good
how, how
question.
long is the VC experience, as it were?
Yeah. So so the short answer is it depends, but let me give you why,
Mm,
right? If you take, I mean, just any kind of company to achieve its full potential, it typically takes years, right? You don't build a really big company
unfortunately, yeah,
in a couple of years.
yeah.
While we might, dream about that, the reality is it takes a little longer,
Mm,
right? And it's probably north of 8 years, 10 years,
mm,
even longer, right? To achieve a certain amount of scale. Now, sometimes along the way, even if that's your intention, sometimes along the way there will be opportunities to um, take money off the table, get an exit. We've done that. We typically talk to the founders, and I guess in the founders calculation, there's a risk adjusted return also that they're optimizing for, or there's a realization that it's probably better to go with somebody right now for the business rather than to try to go on by themselves. So we're open to that. um, Sometimes the startup is growing so well, and they're trying to raise around together and to help uh, all of the interested parties join the round because they might be strategic for the company moving forward. We might sell some of our stake um, during that time, just to accommodate the round. If you think about how we invest, though, as early stage investors, we take a lot of risk in a sense that when we build a portfolio coming in at the seed pre-A round, there's going to be a decent amount of failure, right? And so there will be a few, it's like a power law.
yeah.
There will be a
I was going to
few
bring
that
that
will
up.
really drive the returns. Which you almost don't want to do is sell too early, right? And this is the art,
I'm going to say
right?
this isn't science.
No, no,
This
this
smacks
is
of art
art,
and
right? Like
experience.
there will be some analysis that you'd need to do,
Yeah.
right? But if you sell too early, it will be very difficult for you to multiply your fund,
Mm,
right? But then I've also had it where my paper gains were this, and then the company still fails,
there you go. Yeah.
and then kind of like,
Yeah. If only.
hindsight is 2020. I wish I took some off the
Yeah.
table, right? But really, that's more kind of downside protection. It's not what's going to make you a successful VC. It's not what's going to excite your LPs.
Mm,
Now, on the flip side, you might be overconfident, and the company is already returning your fund or multiplying your fund. And because you believe so much in the company, you don't want to sell anything.
mm.
Um, you just better be right, right?
Yeah. Yeah.
Like,
Yeah.
I mean, if you take a sports analogy, right? Like, you think about a basketball game, and the coach says, "Okay, don't shoot the 3-point shot," and you still take it.
Mm.
Better than
You
make
better than make the shot. Yeah.
because if you miss, you're on the bench, right? So,
Yeah.
so that's the challenge for us as investors. Will be similar challenge for the entrepreneurs, right? What I tell people is cliches are a cliche for a reason, right? Never, never, never give up is
Mm,
a cliche for a reason because it's right sometimes.
mm,
Know when to cut your losses
mm,
is a cliche because it's right sometimes.
mm.
And it's the moments where you don't know which one you should go for, which cliche you should follow,
Yeah.
that will spell the difference of how good you really are,
Okay.
right? And so it's these key decisions. Do I cash in now or do I ride?
Mm,
Is another one of those things. There's a reason to cash in, there's a reason to ride. Like if you take the popular, I guess, story about Facebook, I think they were being acquired for a couple of billion, 3 billion, and everybody was made a lot of money.
mm,
Um, but Mark Zuckerberg and convinced his investors that's too cheap.
mm. We stick. We don't. Yeah.
Right? And those who stuck with it, I mean, are rewarded right now.
Yeah.
Hindsight is 2020, but for every Facebook, there's probably another one where, dang, I should have
Yeah. Yeah.
sold at that time.
So I was very fortunate back in 1998 to be part of a simultaneous IPO on the New York Stock Exchange and the Paris Bourse with Equant. Is it? It still seems to be the dream of a lot of startups that they're going to get a great idea, they're going to have a clear problem to resolve, they're going to build the dream team, they're going to get the greatest funding from a fund such as yours, and they're going to take it all the way to IPO. Is that reality now? How many exits really are from IPOs or institutional sales?
So it's a good question, right? So entrepreneurship is one of those things that is maybe irrational or
Mm,
unreasonable. You have to be very optimistic. You have to believe in yourself because you're going against the odds, right? If you're a startup, you're unproven,
mm,
and either you're going to take on an incumbent that probably has an advantage over you, and so you'd have to be able to be so good that you can overcome that lead that they have, or you're creating a new category where you're changing perceptions, you're changing habits, which is also another kind of uphill climb. So you don't embark on this journey unless you have the optimism to overcome all of these. And as early stage investors, again with this power law, we're really shooting for these outsized
mm,
returns. Like
mm.
you should be able to do this. Now, whether or not it's an IPO or it's M&A, both can be lucrative. Again, going back to, I guess, basics, I like to think of timeless investment or business principles. I would often kid our founders. You want a valuable exit? Yeah, just build a valuable company.
Company, yeah, fair
Right.
enough.
Right. Like I think sometimes we get enamored with valuations. We think that the finish line is becoming a unicorn or is going
Mm,
IPO or
mm,
whatever. But really, at least for the IPO scenario, it's another funding event. It's an
mm,
important funding event. There are people who will be able to realize some gains from there, and then people can invest in you for
but it's
truly the
not the
long
end of the
term.
journey, right?
Correct.
Yeah.
Right. Like I was evaluating one of the stock exchanges together with one of our founders, and the investment bank that we were talking to was saying, "Oh, we can get this. We can probably get this multiple for your
Mm,
business," and
mm,
it was a pretty healthy multiple.
I'm sure.
And so I was laughing. I was teasing the founder like, "Let's go," and the founder say, "Take it easy, Paul, because I'm going to be the one to have to answer for that after the IPO."
Okay,
So
yeah.
so I don't want it to be, I want it to be good, but I
Mm,
don't want it to be that good.
mm,
Um, and going back to the I guess the initial discussion we had when we started the podcast is really this is the change. When money was free, companies were staying private longer, valuations were
stratospheric.
yeah were going up,
Mm,
and there comes a point where nobody wants to fund you anymore,
mm,
right? And so
mm,
how else will you exit?
mm,
If somebody wants to buy you, great.
mm.
But if nobody wants to buy you, then you have to go to the public markets,
To get access to more capital.
and the way they might evaluate you might be different.
Mm,
And so you can blame multiple factors. So they were like this, but unfortunately, many of these IPOs have also
tanked post
yeah
IPO, right?
disappointed,
Or
right?
been underwater. Yeah.
Um, and so if you think about classic IPO, the IPO investor should make some money,
Mm,
right? If
mm.
if you build a business that's capital efficient enough, that's at a sensible valuation with a true growth plan, you can
Should be
list.
upside.
The people who back you then should have upside in
Mm,
a few years.
mm,
Your stock should continue, and you don't have to be multi-billion dollars from day one,
mm,
right? You want a valuable exit, you build a valuable company. If you think about Amazon, I don't know how many people will recall um, what their market cap was when they went IPO. This is 400-ish million,
mm.
right? In the late 90s. So 400-ish million to a trillion. It's been a long
Yeah.
journey.
Yeah.
Um, but they just kept building, right? And so that's kind of what we're trying to do with our portfolio.
Mm.
Typically, enterprise deep tech sustainability companies aren't overfed with capital because not as many people are as excited about them. Um, but if they truly generate value because they're differentiated, because they have unit economics, um, we're optimistic that they can potentially list, some of them can potentially list at decent valuations where the initial investors are rewarded, but where the IPO investors
Mm.
also have a chance to be rewarded. That would be the ideal
So
scenario.
we've been working with a company here in Singapore that's listing on NASDAQ rather than listing locally. Any comments from you
Yeah.
as to where to list? How important is this?
Yeah. So it's something I'm studying right now for the whole portfolio. Um, Nasdaq is holy grail, right? Everybody wants to go there. It's kind of sexy. You want to ring the bell, whatever. Tell people you got the Nasdaq. The truth is, Nasdaq has many options, and you have trillion-dollar companies listed there. And so, if your valuation of your company isn't a certain scale, some people are telling me 3 billion, 5 billion, 10 billion. I don't know what the actual number is, but if it's not sizable enough, you might not get enough liquidity.
Mm.
You might not get enough support, especially if your business is not something that is as easily relatable to the US investor, right? Maybe if it's a software company or something, some technology company that they will understand,
Mm.
something that's global, sure. Now, you've had guys like C and the rest try because they're the regional champion. You can try, right? I'm not saying, but they needed to be a certain scale.
Mm.
So for that company, I would just say, just make sure that if you do go, um, you're very clear about why they will care. Um, some people will say the Singapore market might not be good enough because it's small, or a local market might not be good enough because they're small. Again, it's both ways, right? Like, who will be excited about your
Mm.
company?
Mm.
We've been investigating other places as well. So there are the local exchanges in the region, Singapore included. Yeah, Australia seems to be promising. Japan, uh, I was pleasantly surprised there.
It's more open nowadays,
Yeah,
right? Yeah.
there is interest. Even London is here.
Mm.
I think with Brexit, they're also trying to find their own bridges.
Very much so.
So, I mean, again, if you can do it, if you have a business that is big enough that people in Nasdaq will appreciate, knock yourself out.
Mm.
You don't want to fool yourself too much. If not, I would really encourage people to investigate other markets, especially again where they will care, right?
Mm.
They will care
Mm.
because the size is right, because the business is something that people will understand, because there's some connectivity to that market. Where they will care, because again, hopefully it's not the final thing. It's not. You will continue to build your business, and that market can continue to support you. So, for example, when we visited ASX, they were talking about how post listing, you can raise money in a day or two,
Yeah.
to continue to fund your
Yeah.
your growth, right? So I would have these
Mm.
considerations that I would encourage people to
I
investigate.
I used to run a listed company here called Datacraft on the SGX, and we were struggling with trading volumes,
Yeah.
daily volumes towards the end. And I remember doing a roadshow. I was in New York, meeting a fund manager there who said, "Yeah, Singapore, I fly over that on the way to China." And the point was, for tech, we just don't look at Singapore. And often we were considering whether we should have listed on Hang Seng, for example. And it was questions I got asked quite regularly. So about the location to list, how to list, where to list, and so on. So, but our company's really listing now. We seem to have a shortage of listings.
Yeah.
Tech is very quiet at the moment.
Yeah. And again, if you think about the time, again, the companies that are supposedly or will supposedly be ripe for listing right now were probably built 8, 10 years ago
Yeah.
within that free money environment.
Yeah. Yeah.
And so, how healthy are they
Yeah.
um, to list? Right. So,
Yeah.
you can say there's no interest, but you can also say maybe they're also just not quite ready.
Mm.
Speaking about Singapore, uh, we have been um, speaking with the Singapore Stock Exchange, with various members of the Singapore government. And I think they're also recognizing that there is an opportunity
Mm.
here,
Mm.
right? Like, I think they realize that it's something LPs or limited partners, people who invest
Write the
in
checks
VC
in your
funds,
funds.
yeah, um, are asking more and more now. Now, yeah, they're saying why there are not enough exits in Southeast Asia,
Yeah.
right? Again, there are
Yeah.
many ways to answer that, right? So is it because your companies aren't good enough? Um, and I have a couple of answers. So one is, well, you meet a kid in college and you tell him, you guys aren't very smart because you haven't graduated, but you say, but I'm still in college, right?
Yeah.
Like, I'm supposed to graduate when I'm done with my fourth
Yes.
year. I'm in my first or second year college. I'm in college, but don't say I'm not bright just because I
Yeah.
haven't graduated yet.
Yeah.
Give me time to graduate. And so, if you take the Southeast Asia ecosystem, I think we just really started becoming something in maybe 2015, 2016. I'd like to think it's probably 2016. So we're in year 8,
Mm. Mm.
right? And so, if you think about, especially for early stage guys, right? Year 10 to 12, so the next 2 to 4 years is probably when we should be judged whether we can build interesting companies or not.
Mm.
And if we do, then that's the time we graduate. But don't judge us now. And then the
Mm.
second thing I will say is, again, you want a valuable exit, just build a valuable company. I will point to companies around the region that might not have been tech companies, or tech companies the way the tech industry has been built the last few years, that are still multi-billion.
Mm.
They were just built a certain way, and,
Mm.
and investors got comfortable with how they create
Yeah.
value. So then that's the challenge for the tech industry, right? Is to graduate in the
Mm.
next 2 to 4
Good.
years,
Good.
and to show that we can build real businesses and generate real value. That's the challenge. It's not just that we can build growth businesses, because I mean, you've run organizations before. Any monkey can sell a dollar for 50 cents,
For
right?
sure.
Right, but it's being able to sell a dollar for two or three or four,
Mm.
that will say, okay, you actually have a valuable
Good.
company.
Paul, one last question, if I may. I'm being asked constantly by people, how do I get into the VC world? How do I go work for
Yeah.
a VC fund? How do you bring people into your team, and what type of skill sets do you tend to look for in VC in general, never mind Wavemaker?
Yeah. So what you will actually see is there will be a range depending on the stage and strategy of the VC fund. And yeah, I'll answer that depending on the level of which you want to enter,
Mm.
right? So if you want to enter at the analyst level, then almost anybody can go. I mean, you show you're bright, you show you hustle, you show you're curious, you show you're personable, you have a chance. Um, it'll be competitive,
Yeah.
but just like anything, right? Like, if you can prove you have this, you can break in. The more senior you want to be, there are different ways to get there. You can stay in a VC firm, and it's kind of like an apprenticeship where you stay on, and over time,
Grow inside the fund.
yeah,
Yeah.
and build your track record. You can be an operator, um, which also gives you a different kind of experience, a different kind of perspective. And I guess the better you are at it, um, better your chances potentially. But if you take a sports analogy, um, not all the best players become the best coaches,
Yes, for sure.
right? Some of the players just should stick to playing,
Yeah.
because they can't articulate why they're so good. And some players might have been mediocre or poor, but they're really good coaches,
Mm.
right? And as you become more and more senior in a VC firm, I will liken it to being more like the coach,
Mm.
right? Because you're not the one driving the car. Now, this is again VC.
Mm.
PE is a different skill set,
Yeah,
right? Like
private
our
equity.
growth is probably different. Maybe your consulting background or your investment banking background will
Yeah.
become even more valuable for those kinds of things.
Mm,
So I guess there's a range of ways you can get into it. Um, Not everybody will be good at it. Uh, I would suggest just trying to meet people from the industry
mm,
and see if you like it or not. Again,
mm,
it can be better in your imagination than it is in reality. But for me, at least, if you take my background, I'm probably an accidental VC, right? Like I studied in the Philippines. I did product management at Procter and Gamble for old school stuff like bath soap and detergent. I built businesses and sold them, but they were probably more just tech enabled businesses rather than true tech businesses.
mm,
Um, and I just met my partner. The Singapore government gave us a break, and here I am.
mm.
But when I started, if you looked at my CV and or you met me for the first time, how
Yeah.
can you be a VC?
Yeah.
So maybe I'm also evidence that who knows what your background needs to be.
Mm.
My midterm marks are good. I don't have my final marks yet. Hopefully, my final marks are
Hopefully it
good.
works out well.
Yeah, to say that okay, you're a decent VC.
Paul, thank you very much. I know you're flying out of here again
Yeah,
today,
yeah.
but I really appreciate you coming in
No,
today.
no, no. Thanks for having me.
Thanks
Thanks for
very
having
much,
me.
Paul.
Thank
Thank
you.
you.